you don't have to negotiate with your investors. If you read most PPMs, the investors really don't have any say in the disposition of the
Okay.
property. Um, this is one of those things. If you, as an investor, are looking at and investing in a syndication, for God's sake, do your homework. If you've never read a PPM, sit down and force yourself to read it. And then go find yourself a good SEC attorney that will explain it to you in English, because there's a lot of legal garbage in there. But when you read it, you'll find there's about 14 or 15 pages in that PPM that when you read it, they're all reasons why you should not invest in this deal.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Shawn Griffith out of the DFW Metro, is a commercial syndicator. Shawn, welcome to the show.
Hey, Dylan, thanks for having me on. I really look forward to sharing some things with your audience.
Great to have you on here. Great to meet you, Shawn. I always like to start off at the top of this show by asking guests how they got into real estate.
Oh man, that's a long story, but since we're trying to do short form here, I will give you the highly abbreviated version. I had a friend of mine in the Dallas area that had invited me to go to one of these weekend real estate seminars where the day one they talked about how you can, retire with, 10 single family homes. Being a math guy, I was doing the math and going, okay, I probably need 15, not just because of my salary, but I know you're never going to have those homes 100% occupied all the time. So you got to have some flex built in there. And then the next day they talked about multifamily, and being a math guy, that really made sense to me. Why manage, 60 or 70 individual homes when you can manage 60 or 70 units under one roof and have somebody professionally manage it on site for you? So for me, that made a ton of sense. Um,
Getting into
so
yeah.
yeah, and so anyway, I wasn't ready to take the plunge as a general partner. Excuse me, as a general partner on a deal, but that my friend was, and he got into a deal. I invested with him, and he just absolutely crushed it. We got like 3.5 times our money back. It cash flowed 12 to 14%. And every day I look at him, I go, "You bastard, you ruined me." Because I'm still looking for a deal that good.
That good.
It was like the unicorn deal. They're excruciatingly rare. But anyway, that got me started investing in real estate.
What year was that in that deal?
That would have been like 2011, 2012.
So at that point in time, was the idea of syndication as prevalent as it is today?
No. And as a matter of fact, the syndications, when you got the paperwork, the PPMs were all numbered, and you were given a specific number, and that they had to track all of those. manually. Everything was paper.
Wow.
Yeah.
So at that point in time, what would be the process like? Is it like you have a group of investors and you have deals that you're sending them on paper and they're signing off on investing that they want to do per deal and it's kind of snail mail type of thing?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Yeah, pretty much.
Wow.
Usually they would like FedEx or UPS it, but or if you're in the same city, they might hand deliver it.
Times have changed. Times have changed.
Oh man, with the nice investor portals like Cashflow Portal, which is my favorite, and I will plug them every chance I get because they are. If everything was equal in all the portals, I would still go with Cashflow Portal because their customer service is white glove.
I want to ask you about that deal that did so well. What asset class was it? Was it, commercial, residential, multifamily, couple hundred units? What was it like?
So it was a 64 unit Class C multifamily. It needed some mild rehab. It was a boiler chiller property. Um, and but it was in an amazing area. It was like across the street from a school. And it was in Carrollton, Texas. I know you know where Carrollton
Yeah.
is. One of the things about Carrollton at that time was they were not issuing any more multifamily build permits. So it was, so you had like almost zero new competition coming into the area. That's changed somewhat,
Yeah.
but you know, uh, it was just a great deal.
I've heard now about this time frame, not 2011, not that time frame, but I've heard about 2016, 2017 up to 2020, how it was almost like you couldn't buy a
If
bad deal.
if you could fog a mirror, you could make money in real estate.
And when we talk about the multifamily space today, I've spoken with so many investors who've let me know there's distress on the operator side. So people who may have bought too deep or their pro forma isn't hitting and things are happening that are unexpected. Their arm rate has doubled. So what happened? What was kind of the perfect storm there?
Oh, everybody had this buying exuberance going into the top of the market. Um, I bought a deal in November of 21. And my friends were all going, "Oh, you should use floating rate debt because it's cheaper." And I'm going, this is the first deal I'm buying as a GP. I'm going to be more conservative. If I can fix a cost going into the deal, that's risk reduction, not only for me, but for my investors. And so I got a really nice, like, I think it's like 3.89% fixed rate loan. That loan is the only thing that makes that property valued above what we paid for it right now.
Wow.
Just because, the market in the DFW area lost around 30% of the value since 2021.
And we're seeing a number of different factors because we're seeing so much development, not necessarily even development that started now. It could have started 2 years ago and be finishing now, but in that time, things have changed. So there might have been
Yeah.
a massive shortage of housing. Now there may be even some surplus in multifamily. At the same point in time, rents everywhere have not gone up. You've even seen in some places they've gone down. So when you have that and your rate has doubled, it's not easy to deal with.
Oh, and let's not forget inflation of expenses like insurance, taxes, salaries, all of that it's
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
it's never just one thing in business, right? It's always a combination of things. Now, there might be one key driver, but they're all related. And, with multifamily, I think the biggest, everybody talks about the interest rate, and that's really honestly secondary. If you've been conservative in your underwriting, you should be able to handle some interest rate flex. Now, if you're truly conservative, you're not going to get a floating rate loan unless you just absolutely have to. Like if you're going in, like the deals we buy, which are typically moderate to heavy value adds, you're not going to be able to get a fixed rate, Fannie or Freddie loan. You're going to have to go with a bank loan, um, bridge debt, basically.
Now, these multifamily syndicators who may have bought too deep, my understanding is at the 5-year mark or at the 6-year mark, that's when they effectively told their investors, hey, we're going to exit at this point in time. They've got to renegotiate with their investors, with their lenders, and find a solution. So there's distress.
Yes, but I want to make a slight adjustment to that statement. You don't have to negotiate with your investors. If you read most PPMs, the investors really don't have any say in the disposition of the property. Um, and this is one of those things. And I'm talking to the audience right now. If you, as an investor, are looking at buying into and investing in a syndication, for God's sake, do your homework. If you've never read a PPM, sit down and force yourself to read it. And then go find yourself a good SEC attorney that will explain it to you in English, because there's a lot of legal garbage in there. But when you read it, you'll find there's about 14 or 15 pages in that PPM that when you read it, they're all reasons why you should not invest in this deal. You're going to read that and you're going to go, oh my God, why should I ever invest in this? I mean, it talks about wind, flood, fire, famine, hail, locust, you name it, it's in there. But that's in there not only to protect, the guys putting the deal together, the sponsors, but also you as the investor, because it's going, hey, when you see all that stuff, what it should prompt you to do is, don't be afraid of it. As a matter of fact, the SEC attorney I had that explained it to me, he goes, the only reason you should be afraid of this section of a PPM is if it's missing. He goes, because if it's not in there, they're trying to hide something.
Yeah. And that's not a good thing in syndications. You don't want to
No,
be a syndicator doing that. You'll
no.
end up in some hot water fast. Now, when we talk about acquisition in the multifamily space, I was mentioning to you, Shawn, before hopping on here, there's people making offers, and then there's a lot of people who may have very large funds and syndications, but have not actually got something to closing this year or even in the last several years. So what would be your feedback to folks who may be jonesing to get themselves into a multifamily deal and excited to get one under contract, but maybe having some difficulty there?
Well, first thing I would say is, as a word of caution, is don't let your jonesing to get into a deal let you make mistakes and make compromises. You should have criteria well established, and you should not vary from your criteria. And as far as deals, I mean, getting into a deal for us at Craft Capital, it's about persistence and consistency. This year, we screened over 300 deals. We actually underwrote about 30 of those. And out of those 30, we submitted, I think, 17 LOIs. And one of those was accepted, and we closed on it September 23rd. We had another one that we accepted, but we ended up walking away from it because we had early access due diligence and there was a major foundation problem. And we're not afraid of those because we do heavy value add. Um, but they didn't want to come down on the price like we felt was necessary to, compensate us for all the work and time that was going to have to go into this thing.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
I've also spoken with some folks who are more than a handful, who are maybe newer to the multifamily space and are looking to make offers through seller finance. Do you have any guidance for folks when they're either talking to listing agents, commercial brokers, or sellers themselves about how they might be able to broach that conversation?
Just bring it up to see if it's an option. Um, we did on one of our deals. Matter of fact, that was the deal that we ended up walking away from. The guy was willing to carry part of the note back, um, but you know, it's it, it's like anything else in business. It's negotiable. You just have to ask.
Now, when we talk about the multifamily space, there's and commercial in general, there's so many different segments that people could look at, right? You could look at multi-use, you could look at commercial, residential, hundreds of doors. You could look at 50 units and below. You could look at townhomes. I know people that syndicate for builders, right?
Uh
Uh,
huh.
is there one of these segments that you feel is more manageable or that you're preferential towards? Or is it really much, the personality and the comfort level and the expertise of that operator?
Oh man, there's so much in that question. Um, Short answer is I have to give you the standard statistical answer. It depends. Um, you know, One of the things I found about real estate, like you pointed out, there's so many different areas. Every single real estate deal is different. Now, 80 to 90% of it's the same, but that other 10 to 20% is really where either the money's made or you as an operator is going to get crushed. And you have to understand a lot of those nuances. That doesn't mean you have to know everything, but you've got to be prepared for everything. Just like any business, the worst thing you can be going into a real estate deal is undercapitalized.
Yep. Yep.
You cannot run out of money because as soon as you run out of money, now you've got to start cutting corners. And if you don't have money to do repairs that the lender says, oh, guess what? You have to do this and this and this. Well, if you don't do it, you're going to be in default and they're going to take the property back.
No
You,
question. You
no,
know,
it's never just that cut and dried. I mean, there's always things to do, but you as the deal sponsor, you and your team are going to have to come up with that money somewhere.
Now, when we talk about raising capital for these deals, syndicators can have a myriad of different backgrounds. People coming from Wall Street, people who are builders, people who
Hmm.
may not have experience raising capital, but they may know, hey, I've reached a limit where
That
I've
was me.
got to either pivot my business or continue what I'm,
Hmm.
but maybe at a smaller scale. For those folks who are in that category, and you said, you hadn't raised capital beforehand. What is the process like generally? And then for folks who may be worried about, hey, how do I start doing this? Any advice to them?
So if you're just getting started and you think, hey, I'm gonna do a deal in the next 12 months, you should already be raising capital. Now, that doesn't mean, you've got to put together a pitch deck and all this other stuff. You need to be having conversations with people like, Hey, Dylan, I'm getting into this real estate business and I don't have a deal on the table right now, but at some point in the future, um, we're going to have opportunities for people to invest. Would something like that interest you? And you just start the conversation uh, because investing isn't about uh, the shiny pitch deck or how good you can talk to people. In the end, it comes down to trust. Do they trust you or not? And for them to trust you, they need to get to know you a little bit. So for me, that's um, the first deal I ever did. My partnership team asked me, say, "Well, how much money do you think you can raise?" And I said, "Well, I don't know. I've never raised capital before." I said, "But I'll commit to raising 100K more than I'm going to invest myself." And I actually ended up doing better than that, but they go, "No problem. We'll raise the rest of it."
Hmm.
Because it was a small raise. It was like 4 million. And now at the time when the first time I did it, 4 million seemed like a massive number.
Yeah.
Now it's
Yeah.
not that big a deal.
Now, when people are going about this process and they're trying to determine what the best way for them to raise capital is, I actually spoke with a syndication attorney who was giving me the different options. He ended up telling me, look for some partners, don't necessarily syndicate. This was a syndication attorney telling me this.
Yeah.
Um, at what point in time are certain strategies like, limited partners better than syndication in your perspective?
So it's just like any other investment. What are you trying to achieve with your investment? If you're syndicating, you're investing more than just money. You're investing your time and your effort. So you got to ask yourself, am I trying to generate cash flow here? Am I going for the long-term capital appreciation and I want to maximize that? Because if you're trying to maximize your capital appreciation, maybe it makes sense to have limited partners that are interested in just being your financial backer and you do all the work and then you get compensated for that, with an outsized share.
Sure, sure.
Again, this is the thing I love and hate about real estate is there's so many different ways to make money in real estate. There's also, people don't talk about it much, but there's ways to lose money in real estate too. If you don't pay
Yep.
attention and do your homework, you get into a situation that's hard to get out of. And that's
Yep.
where some of the operators are today.
That's exactly true. And people don't necessarily go and tell those stories everywhere, but you see them
Mm,
once you're in the business. On the
yeah.
single family side, I know so many people who told me their first flip was an educational experience and not one that was tremendously profitable. But
Yeah.
at least in the flip space, fix and flip space, that might be recoverable, right?
Yeah.
But on some of these multifamily deals, it can get hairy quick, especially if you're not tremendously conservative in your pro forma. Now, Shawn, we are coming up on time here. Where can folks go if maybe they're in the DFW metro, they'd like to reach out to you? Maybe they're somewhere else and they've got a deal they'd like you to take a look at. How can they reach out to you or your team?
So the website is craftcapitalinvestments.com, and that's craft with a C, CRAFT investments with an S.com.
Shawn, thank you so much for coming on the show here today.
Thanks for joining us for today's show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing on your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. You can also check out the show's notes for access to free resources, how to get access to world-class lead generation, and even how to work with me directly one-on-one. Don't forget to subscribe so you never miss another episode. See you on the next show.